Preparation of financial statements. Yes, a new topic. And feel you are grown up now. You know, you have learned the accounting cycle. This is the accounting cycle that we in fact started learning. You went through source document, then journal, then you learned how to prepare ledger, and then you learned how to put balances in the trial balance, and now time has come to learn financial statements. So, in fact, in this module, our focus would be to learn the financial statements. That what are these financial statements and how these financial statements are prepared. And we will learn it in a very easy way. Just let's see that why do we need financial statement. In fact, we need to know the financial position of the entity. We need to know the financial performance of the entity. We need to know the cash flows of the entity. We need to know the changes in the owner's equity. And we need to know the significant accounting policies and disclosures. So all these, in fact, we get from financial statements. When we say financial statement, we must know what are the components of financial statements. So broadly speaking, mainly there are two components of financial statement. One is the income statement and the second one is the balance sheet. But when we look into the International Accounting Standard, there are 5 components of financial statements. One is statement of financial position, which is in fact the balance sheet. Statement of profit or loss and other comprehensive income, which is in fact the income statement. Then statement of cash flows, statement of changes in equity, and notes to the financial statements. These are the 5 components. But here, at the beginning stage, our focus would be on learning balance sheet, which is the statement of financial position, and the income statement, which is in fact the statement of profit or loss and other comprehensive income. So, at the beginning stage, at this stage where you are right now, we will not use difficult terminologies. Rather, we will make each and everything very simple to understand. And for its ease to understand for you people, I am relating these 2 financial statements, balance sheet and income statement, with the basic accounting equation. So the income statement is in fact the same equation that we discussed in our earlier modules, incomes minus expenses equal to profit. It is in fact the base of income statement, and the base of balance sheet is assets is equal to owner's equity minus liabilities. So these are the 2 basic accounting equations which are in fact giving us the results in terms of reports. So if we want to learn what is income statement, just focus on this equation that income minus expenses is equal to profit. This is income statement. And if we want to learn what is balance sheet, focus on this equation that assets are equal to, yes, owner's equity and liabilities. So based on this, let's do some practice in which we will have a trial balance, and out of that trial balance, we have a closing stock, which is not a part of trial balance. This we will learn in detail as well, but as of now, just keep in your mind that closing stock is an information which you will always, as of now I am saying, which you will always see appearing out of the trial balance. because this is just an information. It is not a transaction. It is in fact a condition, you can say, for which we have to do an adjustment. So by the way, at this stage, I don't want to make it complex for you to learn the concept behind closing stock. Just remember that closing stock is in fact an information that you will find out of the trial balance, since we did not do any double entry for this closing stock. Okay, well, so it is a trial balance with us in which we see there are debits and credits. Bad debt is an expense. Advertisement is an expense. See, expense always appear in the debit side of trial balance. Telephone bill is an expense appearing in the debit side of trial balance. Stationery is an expense appearing in the debit side of trial balance. Repair is an expense appearing in the debit side of trial balance. Sales revenue is income appearing in the credit side. You know very well that income is of credit nature and should always appear in the credit side of trial balance. Purchase is an expense appearing in the debit side. Salaries and wages are expense appearing in the debit side. Machinery is an asset. Asset being debit in nature should always appear in the debit side of trial balance. Creditor is a liability being credit in nature should always appear in the credit side of trial balance. Debtor is an asset, debit side. Furniture is an asset, debit side. Land is an asset, debit side. Drawing, it behaves contra to capital. Okay, being contra to capital, it will always appear in the debit side. Okay, and then rent income, with its name it is obvious that it is income. Being income, it's credit in nature, should appear in the credit side. And capital, the member of owner's equity, credit in nature and should always appear in the credit side. So this is the total of both sides, which is equal. We have trial balance with us, and with the help of this trial balance and this information of closing stock, we have to prepare income statement and balance sheet. Okay, this is the requirement that we have to prepare now with the help of trial balance. Remember, with the help of trial balance, we have to prepare income statement and balance sheet. Okay, let's move forward. We know very well that for income statement, the equation is income minus expenses equals to net profit. Got it? Great, great. This is what we are preparing, income statement. So the equation of income statement is income minus expense is equal to net profit. So one thing that we have already worked out in our trial balance is that we have identified incomes and expenses. This is our income. You can put I with this, and this is our income. You can put I with this. Okay? And for expense, always remember, for income, you will never look in the debit side, please. For income, you have to look in the credit side only. And in credit side, we see these two are income. This is creditor. In the credit side, cannot be income. And this is capital. In the credit side, cannot be income. So rest of the two are income. It's a shortcut, and it will always work. For expense, we have to look in the debit side. So expense is something that has expired, for which we cannot obtain economic benefit in future. Bad debt is our loss. Expense. Advertisement is an expense. We have obtained economic benefit of it during the reporting period because of this advertisement campaign. Telephone bill, we have utilized. Stationery is an expense, expired. Repair we have taken economic benefit of repairs, it's an expense. Purchase, the goods that we have sold, is purchase, it's an expense. Something I will speak about this closing stock while discussing purchases. So it's something that I will discuss later along with this purchases. Okay, this is something we will discuss later. Anyways, so salaries, it's an expense. Machinery is long term, it is an asset. Then furniture, it's long term, it will not expire in one reporting period, it's an asset. Debtors is an asset. Furniture is an asset. Land, long term, it's an asset. Drawing is contra to owner's equity, it will be subtracted from owner's equity. Rental income is income. Capital is owner's equity. And this creditor is liability. So what we did, we in fact marked, here I'm writing something, focus. We marked I, E. I for income, E for expenses. We marked A, O, E, and L. Okay. In fact, by marking these symbols, you can say, now we are confident that altogether this trial balance is in our grip. Okay, let's see, move forward. So, all the expenses you see are appearing under this expense. Okay, these are the expenses. I will speak about this stock later on. And all the incomes we placed over here from trial balance we took and placed over here. Okay, so this is the total income minus total expense is profit. Got it? Okay, I have put this arrow. I will explain it little later. Well, so we have to place all the assets under the heading asset. We know very well for balance sheet the equation is asset is equal to owner's equity plus liability. So asset is equal to owner's equity plus liability. This is what the equation for balance sheet, and for income statement, incomes minus expense is equal to profit. So from trial balance, we will put all the assets here. Remember, I have to discuss this closing stock concept little later. And we place all the owner's equity items under the owner's equity and liability items under the heading liability. Now it's the time to discuss about this closing stock. Look, expense of purchases is 28,000. The concept of closing stock is that the purchased goods remained unsold. We in fact prepare income statement based on matching concept. Matching concept, where we have to match our expenses with income. It would not be justified if we subtract all the purchases from sales in the presence of closing stock. So closing stock means, you can say closing stock means unsold goods. Okay, those remained unsold. So as a tip, remember this thing. Let me rub the other irrelevant things because I'm discussing closing stock right now. As a tip, remember that closing stock which would be appearing in the and rather outside the trial balance, this closing stock will be subtracted from purchases, and this is one effect, and this would be taken as an asset under the heading of asset. Okay, so subtract it from here and place it over here. So these are the two effects of closing stock, that we are subtracting our purchases and taking it as our asset. So these two accounting effects you should keep in your mind for closing stock. It will be added in assets and it will be subtracted from the purchases. I trust by doing practice, it will be more clear for the future practice, inshallah. So let's move forward. Important tips. Important tip over here is that income statement and balance sheet are the two most important financial statements, and accounting equation correspond to these components of financial statement, income statement and balance sheet.